Wall Street seeing a major sell-off after rising COVID cases stoke new fears of an economic slowdown. The Dow plummeting 900 points at one point this afternoon. You can see it's down 904.45 right now. But what will this mean for small business owners? Joining us now to discuss is business and market analyst Seth. Seth, as we take a look at the numbers that continue to go down, what do you think is causing this? Is it primarily this concern over another COVID-19 lockdown?
Yeah, I think it's a perfect storm. Certainly COVID concerns, the Delta variant is driving a lot of this, but secondarily, you have a lot of other influencers. You have OPEC recently reaching a deal over the weekend that's going to increase oil supply. That's hitting the energy sector. You have the Biden administration now maybe at odds with the big tech sector, but really inflation is still around. That's really hitting the small business sector. And I think what a lot of people are realizing is maybe it's not as transitory as the Fed would have us think it is.
Yeah, so we would turn it or actually enter an area of stagflation where we have the COVID-19 concerns and possible lockdowns slowing economic recovery, while at the same time we have inflation that continues to rise.
Yeah, that's a great point, Heather, and that's certainly something a lot of economists and business owners are looking at right now, is that fear of stagflation, where you have inflation on the rise, the economy on the slowdown. Certainly, the labor market is a concern, but the overall cost of goods and what we call the whiplash effect. So a lot of business owners not only rely on labor, which is in shortage right now. It's hard to think that after 2020, but you also have a supply and demand of goods. So there's only so many goods that are out there because, quite frankly, we shut down the world's economy for almost a year. And so as such, you have what's called that whiplash effect, where supply is behind the demand. Liquidity is high. There's a lot of cash in the market. There's just not enough stuff in the market.
What about consumer confidence levels? Because I read a report, I guess it was last Friday, where it talked about consumer confidence levels were down in July.
Yeah, they are starting to trend down again, which is off of the peaks that we saw going into this. I think there was a lot of optimism going into the summer, right? We were opening back up. People were removing masks. But again, all of these outside influencers have consumers being concerned. They're concerned how far their dollars are going to go. They're looking at fuel prices. Now, certainly what's coming out of OPEC may impact fuel prices some, but that's not going to impact the price of milk. It's not going to impact the price of everything else we buy. So that's going to impact consumer confidence and what they're going to spend their money on. They're probably going to start hoarding some cash.
Yeah, and then also on top of that, you have all of these big spending bills planned by the Biden administration, and then how they'll pay for them, and then how that impacts taxpayers. We were just talking to Grover Norquist earlier that said really across the board, people of middle income and lower income are going to be impacted.
Well, they certainly are. And listen, Americans, we need to give them more credit than I think sometimes maybe the administration gives them. They recognize that eventually chickens are going to come home to roost and bills have to be paid. And when you're printing money and creating the inflationary period that we are through massive liquidity, at some point, those bills are going to have to be paid. And if the Biden administration is continuing to push for bigger taxes, Americans recognize by and large that means that their costs of goods are going to go up and jobs and wages could potentially go down. Here's the reality. The only permanent stimulus for the American economy is the American worker. No matter how much government wants to spend money, until workers are back at work and creating GDP, the economy isn't stimulated appropriately.
So what do you see as the best case scenario of how things shape out right now and what needs to happen in order for that to happen?
Well, obviously, my hope is that we continue to see a decline in COVID cases, that we get this Delta variant under control. I know the last guest was talking about how we treat it in vaccinations, and that's great. Let's get the economy reopened. We must get workers back to work. That's the key. We must get kids back in school. That is also a concern on the minds of a lot of parents. So I do still think that the economy is in a good position. I think that we end the year on a high. GDP is still going to go up. It's probably going to be slower than we originally projected for the second half of the year, but I'm optimistic. But that is critical on us getting the economy open and getting the foot of government off of the economy.
Yeah, well, some of the companies hardest hit today when it comes to what's happening with the stock market are some of the travel industries that were dependent on the economy reopening. That's airlines and cruise ships and others. So we'll see what continues to happen. Seth Jensen, thank you very much for joining us.
Thanks, Heather.